So the question is, how much is enough, right? How many symbols is enough? How many cars is enough? How many square footages in your house is enough? How much money is enough? Some of those are easier to answer than others. I'm going to focus on blades, on razors, and I'm going to focus on ticker symbols. Uh, I always thought it was funny that Gillette and everyone else start putting more and more blades on. It wasn't just one blade wasn't good enough. You needed two blades, then you needed two blades and the aloe vera strip, then you needed three blades and a thicker aloe vera strip, and now we're up to five blades and a thicker strip, and who knows what else is going on. And of course, I think it is absolutely ridiculous. And I see the same things going on and on in the investment world. If you've been on my channel in my world more than a couple minutes, you know that I rail against the big box advisors because they unnecessarily have you shaving with a 20 blade razor equivalent with your portfolio. So when things go sideways or when the market corrects, when you have too many symbols, and too many symbols means something different for everyone. But my general rule is if you have more than five, you're in trouble. That's it, five. But what I want to do is I want to just kind of show you what's going on because I believe that the correction that's happening is just a correction. And I think there's a really good reason why there's a correction going on. So I'll just start with the S&P 500 on the screen. And if you just look, I'm going to do some blue lines between a lot of these price charts. And to me, the S&P is just looking to test that kind of the February over here. It's testing this. Now it's testing its old high on February 19th, but I believe anywhere between the blue lines, it's where it's going to test. So I would not be surprised to see the SPY drop to 320, which based on where it is now, I would not be surprised if there was another 5% drop, which overall from where the S&P is, that would be about an 11% correction, which I think would be really, really a healthy correction. Here's the Dow Jones Industrial Average, 30 stocks with the ticker symbol DIA. Again, the same story is going on. Dow Jones Industrial Average with ticker symbol DIA is doing the same thing. It's just testing. Now, it did not break out to new lifetime highs. It's underperforming the S&P 500, but you can see it's just kind of figuring out, are there going to be more buyers coming in at the bottom blue line, or are sellers going to take over? And right now, for that to drop down, in total, it will be about a 6% drop, but it could very likely drop right down to its kind of mid 2019 highs. So we have two indexes about the same country. This symbol you're looking at here is the all world index. So these are all the stock markets in the world put into one symbol. And again, a similar story, broke out to new lifetime highs in August and just coming back within that zone to test that old pricing to see if there's buyers or more sellers coming in. So VT, which is the Vanguard Total World Stock ETF, is again testing. So then we go on to, this is international ex-US. So we started with two symbols for the US, then we did all world. Now this is international. So this is all the stock markets ex-US. So the US is not even in here. And again, I see a similar story. I see a price chart wanting to break higher. It's not breaking down. It's not collapsing. The world's not ending. What we have here is international markets collectively really working to keep their head above water. Now, as they are, you can see that they also have to get above this upside resistance here too. But again, right now I'm just kind of flying around the world and just pointing out a lot of stock markets. This is the Japanese stock market. Again, a very similar story that you're seeing with international and all world. Nikkei has its head above the water again. It's been there 3 times in the past 3 years. So, black line above the blue horizontal lines is a positive. And then we can just go over to Germany. This is just the German stock market. Again, a very similar story, German stock market. This is in local currency. So was the Nikkei just before this, but very similar story here, guys, right? The market's up there. It's digesting. It had a huge clean out below. We see that through almost all the price charts, and it's just up at the top, taking a breather, and looking for more buyers coming in. So as we go around the world, we see very similar things happening. As I circle back to the US, right, because one of the questions most people have, and it's hard to answer it when you're shaving with a 20 blade razor, when you have 15 or 50 symbols, whether you put them there or your big box advisor. But when you are over diversified, OD, right? When your portfolio is ODing on ticker symbols, you don't know what to fix. I did a training webinar last week, and a lot of the questions had to do with, there's inertia. I don't know what to do. I'm stuck. I want to do something, but I don't know how. I don't have the time. And it's because when they look into their portfolio, when you have 10, 20, 30, 40, 50 symbols, you don't know what to do. And the flip side is when you're all in cash, you don't know what to do. It's the same inertia. So as I went around the planet, I just wanted to show you, just in a very simple way, yeah, the world markets have broken out or are breaking out, and they're digesting a pretty big move this year. Now, as I circle back to the US, because the US has been the lead country for over a decade, and there's no reason why it can't stay the lead country for another decade, right? There aren't as many rules as people believe in investing. But I want to start with this slice or segment of the US market. And this is US retail, not online, but actual retail. And if you look here, it is above its lifetime highs, and it's digesting that move that it broke above. It broke above its August high, its August 2018 high back here, and it's digesting that move. And so here we have retail breaking out and just taking a breather with new lifetime highs. Hard to get really cynical when when retail is breaking out to has broken out but is digesting new lifetime highs. Here we have U.S. home construction. Okay, very similar story. Its old highs were here in February of this year. And notice it's digesting way above that, right? If you look at where US home construction is, it's way above its old kind of resistance support area. So super strong right there. And then as we kind of move through some sectors, here's materials. Now, materials have been quiet for a while. I mean, really quiet, and they have a beautiful breakout, and that is making new lifetime highs today. As I record this, I'm recording this on Thursday. So here we have a sector that's been kind of quiet for a while, breaking out to new lifetime highs. And these are pretty major sectors. And then you have, this is the last one. Oops, I got one more I want to show you. I think it's in here. Here's healthcare. Healthcare also broken out to new lifetime highs. Now, it broke out at the end of 2019, and obviously you can see got caught up in the COVID crash, but then really got back up on its feet. And look at just how beautiful healthcare, it broke to new lifetime highs in July, a couple months ago. And again, it's digesting. So we have major sectors of the US um, stock market, ones that you wouldn't expect to be breaking out to new lifetime highs: home construction. Maybe you could think healthcare, but certainly not home construction or materials, because I would think that would have to do something with people using them, and certainly not retail, right? So you have these sectors that you would not expect to be breaking out to new lifetime highs. Now, guys, I am not attached to what the market does. Obviously, whatever I own or suggest people own or talk about, I have a bias for it going higher. But the practice is to be detached, meaning, okay, well, look, if the market goes down, then we'll just get out of the market. And one of the secrets, or one of the big mistakes most people make, is they've never been taught that stepping out and stepping in is okay. And when I say stepping out and stepping out, I don't mean 100% to cash and 100% in. That's not stepping out. That's jumping out or getting scared out. And it's one of the mistakes that I see people make. both staying in when they quote unquote shouldn't, and when they get scared, they go all to cash. And the problem is when people go all to cash, then it's like, oh my gosh, what do I do now? What do I do now? The fear of moving in is so extreme that they just get stuck. And so, what I wanted to show you in today's video, it's not necessarily showing you a bunch of, I keep my phone on to make sure it's not my kids um, when I'm not with them. But the point of me showing you these black squiggly lines is when you're trained to filter out the noise, okay, you can see what others can't see. You can sleep better. And just kind of doing this little flight around the planet, I can just show you, look, Dow Jones doing fine, S&P doing fine, international doing fine, all world doing fine, just the German stock market, that index doing fine, the Nikkei doing fine, right? Some of them aren't at new lifetime highs yet, but they're up near it. And some are broken out, right? And then when I came back to the US stock market, I showed you retail. Should retail be breaking out to new lifetime highs if we're going to crash, right? That doesn't make sense. Is home construction supposed to be breaking out? And so when you're trained to kind of simplify and be ruthlessly simple by using price charts and knowing when to step in and step out, it's just a completely different example. And so I want to make sure that I put a bow on this week's talk because last week I didn't quite tie everything together. And so I think that's really what I want you to take, that when you know how to kind of fly around the planet and look at indexes in other countries and other major markets like international, US domestic, Germany, Japan, right? Major economies. And you start noticing, oh, there's just some digesting going on. Then that's your filter. And then I just drilled in a little bit to the US stock market to show you a couple sectors and subsectors, the two sectors being materials and healthcare, the subsectors being retail, which is a subsector of discretionary, and home builders, which I guess would be part discretionary and part staples. So, guys, if there is you have a question on something, leave it in the comments. I read all the comments. I'll even make sure comments are turned on, and also please give this a thumbs up. I'd love to start building the channel even more, and those little things really make a difference. And look, if you disagree with something, just let me know. You can just email me at rc@fearlesswealth.com. Thanks, guys, for being in my world, and I look forward to seeing you on the next video. Okay, bye. Every person I've ever talked to who does not have the growth and the income they want from their saved money and from their portfolio, they are making one of three mistakes, if not making all three. In this video, I want to show you the absolute most common mistake people are making.